What's up, traders? What's up, everyone? Welcome again to this new course of Divine Trading. And I want to welcome you guys to this new lesson. So, guys, today we're going to be looking at trading Forex. Sorry, we're going to be looking at trading Forex. All right. So, this is our second video on this channel here. So, guys, don't forget to subscribe if you're watching for the first time. Don't forget to give this video a big like. That would help us to help more people, to learn about trading, as it changing a lot of lives, including mine. So I just want to welcome you guys here again in this new video. Welcome here and enjoy this presentation, guys. So the presentation today, we're going to be talking about buying, selling, which is going long. It is buying, shorting forex. It is selling. What is a pip, forex and leverage, currency pairs, and making your first forex trade. So this presentation is presented by Steven St. Pierre. That's me right here, guys. So any form, of information contained in this webinar should not be interpreted as investment advice or recommendation, and it is presented solely as educational material, guys. All right. So this is only for educational purpose only. And I highly recommend that you grab a pen, piece of paper, and take a few notes, because you're gonna have to write a few things here, because this presentation is more about writing and understanding, the basics about trading forex. So trading forex, when you trade forex, what you're doing, you're buying or selling a currency pair such as Euro USD, GBP USD, GBP USD, USD JPY. Now, let's take a closer look at the anatomy of forex pairs. So, the first currency in the pair is known as the base currency. The second is known as the quote currency. In the counter, or the counter currency, right? So the rate at which the pair is trading tells you how much of the quote you need to buy a single unit of the base. So right here we have an example here for you guys. So we have the Euro USD here. So the USD is the quote currency, right? The US dollar. The US dollar, and also you have the Euro currency, which is the base currency. Now let's say, for example, that Euro USD is trading at 1.3010. The Euro is the base and the US dollar is the quote, meaning it costs $1.3010 to buy a single Euro. Now, let's talk about going long on Forex or buying, right? So, Forex traders look to profit from fluctuations in exchange rates of currency pairs. So, if you think that the US dollar is going to strengthen against the euro, you might buy Euro USD to capitalize on a move. Example number one, Euro USD long example, right? Euro USD is trading at 1.3010. You buy 10,000 worth of 13,010. So the Euro USD moves up to 1.31 or 1.3101. You can now sell your 10,000 worth of USD or 13,101, earning you a pip of 100 profit. However, if your USD have dropped down to 1.2910, your position would have lost $100. Understood? Beautiful. I have a very good example here for you guys on the chart. Let's say the price is here. Let's say price is moving around this area, right? And we are on the Euro USD chart. And you say you want to buy Euro USD. So if you buy Euro USD and Euro USD goes up, right? then you're making a profit. You know what I'm saying? So if the euro rise against the USD, then you make a profit. But if it goes down, you make a loss. Most of you guys already know this about the chart. Let's say you're on the Euro USD chart and you buy from here and you're expecting the price to go up and it goes down, then you lose money. So that's basically what we are trying to explain here. Now, this is the price on the left side, right? 1.3010, 1.3011, 1 point, and it goes up or down. So let's say that you buy here, right? So if you buy, the thing is, if you're buying, you are looking to make profit from what you're buying. But if what you're buying, let's say if you're buying a euro and it loses its value, right? If you pay 10, if you pay let's say 1,000, no, 3, 30, 10, right? And it goes down, which means this money is losing its value. So in order for you to make profit, it has to go up. Okay, so now we're talking about, now we was just talking about buying. Now we're gonna talk about selling, which is shorting in forex. So you don't have to buy currency pairs. If you think that the base currency is going to fall against the counter, you can sell the pair instead. Okay, so when you sell forex, you buy the counter by selling the base currency. So this gives you a position that earns a profit when your chosen pair falls in value, also known as a short position or also known as selling. It's one reason why trading forex is so popular. There are no restrictions or extra charges associated with going short. Now we're going to look at another example about going short, right? So let's say Euro USD is here, right? Is here, and you said now I'm going to sell. So if you sell and yes, it falls, you make a profit. But if you sell here, my guy or my friend, and it goes up, then you make a loss because you're selling and the money goes up, which means you are losing money by selling, know. So this is the importance of shorting, of knowing when to short or when to buy. You know what I'm saying? So now we're gonna talk about pip, right? The importance of knowing what is a pip. So what is a pip? A pip is a single point of movement in a forex pair. In most forex pairs, a pip is equivalent to a single digit move in the fourth decimal point of the currency pair's price. If Euro USD moves from 1.0717 to 1.0718, it has moved up 1 pip, right? 1 pip, guys. One more important exception to this rule is currency pairs where the Japanese yen or the JPY, I mean, that's how I call them, right? I mean, you can call them, the way that you want, but me personally, I say JPY. Most people say JPY as well. So let's say that the Japanese or the JPY is the core currency pair. Here, a pip is equivalent to a single digit moving the second decimal point. Now, if USD JPY moves from 110.08 to 110.03, it has moved down 5 pips. Okay, so that's what I told you guys, get up in a paper because you're gonna have to take some notes here. Okay, so we're gonna talk about right now forex and leverage. So as you've probably noticed, a pip doesn't have much value in real terms. So that's why most individual traders use leverage to take advantage of the constant fluctuations in the forex prices. Leverage means you only require to put up a small amount of money, known as margin, to control a much larger amount. It enables retail traders to open short-term forex position without, locking away thousands in capital. However, it magnifies both your profit and your losses, so require careful risk management. So that's one good thing about Forex, guys, that if you don't have a lot of money, if you don't have a lot of money, all right, so let's say you have $50. With your $50, this $50 worth like $500 or even more, because the Forex, they give you leverage. So that's one good thing about Forex, you know, that if you have $100, your $100 is worth like 1,000, you know. So that's the good thing about Forex in leverage here. And like it says here now, it magnifies both your profits and your loss. So you have to take care of your risk, because you might lose a lot of money. So we're gonna be looking at this much further in the course later on. So currency pairs. Okay, now we're gonna talk about currency pairs. Currency pairs are traditionally divided into three groups related to their popularity and liquidity. So we have majors, minors, and exotics. Okay, now we're gonna talk about majors. So majors are the most actively traded currencies, constituting about 85% of total forex volumes. They typically cost less to trade than minor currency pairs because they are brought in sold so much. Now we're going to be looking at some of the major currency pairs. So the major currency pairs, I really highly recommend you guys to take down these pairs and start opening up your chart and looking at them from now on. So we have the Euro USD, we have the USD JPY, you have the GBP USD, we have the AUD USD, which is the Australian. So let's go back on top, right? The Euro USD is the euro versus the dollar. The USD JPY is the US dollar versus the Japanese yen. The GBP USD is the British pound sterling versus the US dollar. The odd USD is the Australian dollar versus the US dollar. The USD CHF is the US dollar versus the Swiss francs, okay? Swiss franc. And the USD CAD is the US dollar versus the Canadian dollar. These are the major pairs in the Forex market. The minor pairs, now we're going to talk about a little. We have the minor pairs, which are while the major currency pairs make up most of the market, you should ignore the minors. The minors, also referred to as cross-currency pairs, these are made up of all the other combinations of major markets such as EURJPY, RNZD, and GBP. Spreads for minor currency pairs are often wider because there are fewer people buying and selling them in the market at any given time, resulting in less liquidity. Okay, beautiful. So, what moves the forex market? It's very important for us to understand and to know what moves the market. So, the economic data, the central banks, politics, these are things that move the forex market. So currencies tend to reflect the economy health of the parent nation. So critical economic data such as inflation, unemployment numbers, foreign trade, or payroll numbers can often result in forex volatility. Central banks have big influence over the performance of currencies. For example, by changing interest rates or printing more money, they may also buy and sell their currencies to keep it trading within a certain level. Increasingly, political uncertainty can drive currency markets that have been happening a lot. For example, the US dollar has traditionally been seen in a safe haven currency, so its price may rise during troubled times. Alternatively, something as banal as a speech by a finance minister can have a big impact on a currency. Let's say President Trump is about to talk, this moves the currency. the forex market. Let's say somebody else is about to say something, they move the market a lot, these big guys. Okay, so now we're going to talk about making your first trade. Now we have talked about all these basic things that you guys need to know, and I'm sure that you guys take notes. No? So now that you know a little more about forex, we can take a closer look at how to make your trade. If you have a forex demo account, you can follow these steps to open a practical trade. If you haven't yet, opening one takes seconds and costs nothing. Guys, I've sent the link for you guys to open up a free demo forex account. If you have not received them in the group, I'm going to leave the link for you guys in the description below so that you guys can go ahead and create a free forex account. Depends on the country where you at so that you can start trading. Beautiful. So if you would like to have more information and you like more in-depth information, we also have a private signal group. If you guys want to join a private signal group, you guys can message me, send me a message on my WhatsApp number. This is the number on the screen right there, so you can take it down, take a screenshot, or just save it on your phone right now as you looking, and just send me a message, and we can add you to our membership group so you can receive high quality signals with our mentors and all of our top traders here. So I just want to thank you guys for being here at this time, for watching this whole presentation. Now let's go jump on the screen on the chart and let's see what we can do. So right now we are looking at the chart. Okay, right now we are chart. Let's see what's going on in the chart here. So right now we're just talking about Euro USD. The top um these are the top pairs that people trade forex market. So right now, as you guys can see, we are in an uptrend. You know, I still have not made a video talking about the trends yet because guys, it's important for us to go, to go with the basics and then just jump on the chart like that. Like, we really want you guys to learn this. I don't just wanna jump on the chart and start giving things that and you don't know about the basics. So the basics are very important. So that's one of the reasons why. So right now we are looking at a high an uptrend. Like, in for example, for you guys that use or that don't know anything about trading view, this is trading view. Okay, this is trading view right here. Okay guys, so right now the Euro USD is at supposed to be in a downtrend in a 1 hour chart. But what happened is that it broke that trend. So now your USD is reversing. Your USD is going up right now. So it's going up and it's gonna go up. No, that's one of the way you can check out the market. No. So I would recommend anybody right now who would want to jump on this trade, you should buy. As we can see in the 50-minute chart, it will break this level right here. We break this level right here, so it might come back here and go back up. So the Euro USD right now is moving up, guys. It's moving up. So if you guys want to take a trade, let's say for a long time, today's Friday, You guys can hop on this trade right now and hold it until like Wednesday, Thursday, and you guys are gonna make some good money because your USD is about to go up. As you guys can see, it has broken this channel right go that's going down. Go up there, break this line as well. It might come back around here to go back again. Where is yep? So I'm seeing that the USD might come right here. This thing is too big. USD might come around here and go back up. So that's a free signal I just gave you guys. Enjoy it. Come here and goes right back up. That's what might happen. Okay, nobody is sure exactly what's gonna happen, but I can assure you this might happen in the market, guys. So, guys, next video is gonna be awesome. Next video is gonna be awesome. I really want to take you guys to all the basics, all the basics, so that when you guys start moving forward, you would have all the knowledge that you need so that you can be a profitable trader. Okay, so that's the reason why I had to do this video like this for you guys so that you guys can learn the basic and then let's go and get this money together. So thank you so much for watching this video with me. And next week, Monday, we're gonna be posting the new video for you guys. Don't forget to like and subscribe, and see you guys soon. Peace out, guys.